It's Friday, traders. Congratulations, you made it. We're looking at another high-risk short put today in Caterpillar. CAT is the ticker for this one. It's got a liquidity rank of 3 out of 4. We're going to be in the monthlies. Yay, cherry bombs. Finally in the monthlies. And we have an IV rank that's pretty high, 64. We don't often see that kind of a high IV. So I wonder what's going on there. It does look like there's some skew to the downside, so more risk to the downside. And as I like it, and as Tasty Trade often likes it, this is a contrarian trade. So bullish when the market is bearish. Can you do that with us? Let's get going. Hi, everybody. My name is Neil. Thanks so much for joining us here in This is Option Theory. You can see we're inside of Thinkorswim's simulated trading, where we get all the learning without any of the risk. So when you're ready to risk your real dollars, you have a track record behind you. You know what to expect. All right. Hope you'll join us. If you do like this video, hit that subscribe button at the end. I do appreciate it. Moving on with today's cherry bomb trade that comes to us from Tasty Trade, as always. 4 days a week. Want those emails sent to your inbox with the trade ideas? Head down to the description and grab them, and we're off. Let's take a quick look at Caterpillar here, and we can see we've been on a downward trend here. We started coming back here. What day was this one? About the end of September, maybe. We thought we were going to make a comeback, and no. All right, we had a big candle yesterday, it looks like, a big green candle, right after a big red candle. So what do you think? Down day or up day? Let's take a look at the broad market to get a feeling here. It looks like I've got more green than red, but what is red here is our broad market indices. Yeah, Dow is down, S&P is down, NASDAQ, Russell is down. So the U.S. indices are down, VIX is up, crude is up. So our biggest winner is natural gas today. Our biggest loser is the Russell. So hopefully you are short the Russell and long the natural gas. All right, so that is not me as well. I'm getting beat up recently, but we're going to keep on keeping on here and testing out our theories. Let's go to add simulated trade in Caterpillar in the January monthlies with 49 days to expiration. We're looking at selling the 175 put here. And of course, what are we looking at here? 6 plus, we had 21 cents. So we could do 10 cents more than this. So that would be 304. It looks like 305. Let's go ahead and click this. Let's dial that up to, I'll say 305. That sounds good. All right, 305 is awesome. That's a nice mid price. Let's go to the risk profile. And by the way, we have one contract. That's this right here, selling one put. The buying power effect is going to be bigger, of course, if you're doing this in an IRA. It's going to risk the whole, basically the $17,000, but a little more than that. Let's go to the risk profile and check out our probabilities of profit at expiration. Let's set the date in the top right corner to the same date that we see in blue over here, which looks to be January 22nd, 2022. How about that? The 22nd, 22, get that? All right, cool. Let's shrink this up a bit. Let's go over here, set slices to break even, and we are looking at a 79% probability of profit at expiration here, according to Thinkorswim. And if we hop over to the same trade here in Tastyworks, we're seeing that we have a 79% pop, but a P50 of 87%. So an 87% chance that we'll be able to walk away with, let's call it $150 somewhere in the next 49 days. The tough part is you'd have to put up $17,195 worth of capital to hold this trade. Then that's what could happen. You could lose that much if the market, if Caterpillar goes out of business. So you could, of course, make this a vertical. Make this a vertical, you really lose the profit of $305. It goes down to a lot less. But you can have a number that you could sleep with. Well, yeah, you can sleep with a number. That sounded awful. You can sleep at night. All right. So anyway, you could make a $10 wide, make it sort of like a synthetic short put right here. And you could even go, $20 wide here. So let's, for ha-has, make it a $20 wide. If I could make that happen, that'd be great here. So click this, and then I'm going to control click on that one. There we go. So instead of collecting $300 here in this one, we'd collect just about half of that. But instead of taking a risk, let's go ahead and right-click this trade, choose confirm and send. You won't be able to see it, but I'm going to hit this window. I'm going to change this over to the IRA. I want you to notice the buying power effect changes. Well, it's supposed to change. It didn't change. So let's try that up here, IRA. Right click, confirm and send. Huh. That's weird. Let's delete the trade. Try it again. 175, 155. You can do this here, Thinkorswim. You've never given me this problem before. Oh, because I'm in the, yeah, right. Because I'm in the vertical. All right, the buying power effect here is $1,800 is what the most that we could lose on this one. Versus, had I just done the 175 short put, dial that up to 305 like we were before, right-click this trade, confirm and send, instead of $17,000 of max buying power reduction there. I like that idea. It's not a 1/3 the width of the strikes on this one, but I'm going to try a synthetic short put on this one. Let me know what you think on that one. All right, so 175, 155. We've got the vertical here rather than doing the short put. I'm going to go ahead and put this one in my IRA here. Hopefully we'll get a winning trade on in our IRA. Let's right-click this, confirm and send. I'm happy with the $1,800 of max loss. 175. Oh, well, you know what I didn't do? Do risk profile on this one. That slices, break even, bingo. So similar probabilities here on this one, a 78% probability of profit. So I could take that with a lot lower max loss. Yay. Yay, verticals. All right, let's see and hope that this works out. Going to go in the IRA and hit send, and we've got our working orders there. Let's go back to full screen on this one. Thank you so much for watching this week. I did miss yesterday's Walgreens trade, I think it was. Hopefully, if you put that on, hey, I'd love to hear from you. How did it go? Yeah, otherwise, I wish you a happy holiday weekend for those of you Hanukkah people. Happy Hanukkah. And the rest of you, those of you that don't celebrate Hanukkah, well, that's coming up, I guess, right? Cool. All right. Bye for now. May the market be with you.